Welcome back, dear traders. Wall Street analysts are trying to puzzle out whether the Fed has been able to curb high inflation. The fresh CPI, a crucial market catalyst for the stock market, will be on tap tomorrow. InstaForex analysts are ready to share their forecast for today. Risky assets and the telecom sector came under pressure on Friday from a growing yields of US Treasuries. At the same time, a rally in the oil market supported the Dow Jones and the S&P 500. The Dow Jones closed last week 169 points or 0.5% up. The Nasdaq slipped by 0.61%. The S&P 500 logged a modest 0.22% intraday gain to close at 4,090 points. The benchmark stock opened a new week with muted moves. The indexes traded mixed in the New York pre-market, and the Dow Jones edged down by 0.03% before the opening bell. The S&P 500 and the Nasdaq rose by 0.15% and 0.5% respectively. The S&P 500 is expected to trade in the intraday corridor between 4,040 and 4,120 points. The Nasdaq closed last week with losses for the first time this year. The bullish stocks seen under pressure amid growing yields of Treasuries. Yields of the 10-year benchmark Treasuries rose to the highest level in months after a failed auction on a Thursday. Yields of 10-year Treasuries stood at 3.75%, the highest level in 5 months, having grown by 31 basis points. Besides, yields of 2-year Treasuries climbed to 4.51%. Most of the 11 sectors included in the S&P 500 increased, but the consumer goods sector sank by 1.22%. The energy sector jumped by 3.92% in light of the news about Russia's intention to cut its crude deliveries, and the news helped the Dow Jones avoid losses. The Nasdaq logged the first decline in 2023. The index shed 2.41%. The S&P lost 1.11% last week, and the Dow Jones inched down by 0.17%. The risk mood was dampened not only by growing yields and treasuries. A few Fed's policymakers made comments on the Fed's agenda for 2023. Nearly half of the comments were hawkish. Despite an increase in the U.S. first-time unemployment claims, the labor market remains overheated. This could assure the U.S. Fed to raise interest rates higher and put them on a hold longer than expected. The data on the U.S. inflation and retail sales will act as the catalyst for the short-term direction in the stock market. A revision in the market sentiment will depend on whether inflation eased its grip in January. The median forecast suggests that consumer prices could have grown by 0.4% in months. Retail sales could have rebounded by 1.6%, and the risk could be higher because the revised CPI released last week showed higher scores in December and November. This lifted the 3-month CPI from 3.1% to 4.3% on a year. Analysts warn investors against too early optimism, which encouraged a strong dynamic on Wall Street at the beginning of the year. The market has already upgraded the forecast for monetary tightening. The ultimate size of the federal funds rate is now seen at 5.15%. More Fed's policymakers are due to make their comments on the inflation data, and this could exert extra pressure on the risky assets. Today, Wall Street is trading quietly in anticipation of the macroeconomic data. And today, investors found out good news for stocks. A rally in Treasury yields cooled down, which helped the Nasdaq to perk up. Apple, Amazon, Alphabet, Tesla and Microsoft gained ground before the opening bell. Meta shares climbed by 1.4% because Facebook's parent company was ready to announce a new series of layoffs. IMF Managing Director Kristalina Georgieva cheered up financial markets because the US economy is likely to avoid a recession and China will deal with the pandemic fallout. The positive factors are also the healthy labor market in the United States and the European Union, reopening of China's economy, and surprisingly upbeat results of a monetary tightening by central banks through soaring inflation has not been defeated yet. The US dollar opened on an optimistic note. Its index rose to 103.80 intraday and drifted to 101.50 later on. The intraday Canada for the index is determined between 103.20 and 103.90. Analysts are betting on the strong US dollar. Upbeat US CPI would summon hopes for aggressive monetary tightening by the US Fed, and this is always bullish for the US dollar. The US non-farm payrolls released in early February proved that the economy is on a sound footing. In turn, the Fed does not see any danger in keeping interest rates at high levels for a longer time. Market participants have already revised ultimate levels and now predict that the key interest rate will increase to 5.2% in July, compared to the current range of 4.5 and 4.75%. The fresh forecast by the International Monetary Fund paints a more optimistic picture for the year ahead of looks better than market expectations. This could weigh on the US dollar. On the other hand, the US currency might receive support from a geopolitical uncertainty between the United States and China. Anyway, Wall Street will receive a fresh impetus only on Tuesday. The Canadian dollar stayed afloat on Monday. The USD CAD pair gained a modest 0.3% in the pre-market to trade at 1.3348 in the New York session, and the currency pair is likely to hold in the intraday Canada between 1.3310 and 1.3420. The US dollars advanced earlier today, and a 1% decline in oil prices weakened the loonie intraday. After the US dollar retreated from its highs, the loonie recouped early losses. Brent crude futures skidded by 0.7% to trade at $85.72 a barrel, and WTI futures sank by 0.9%. Both benchmark rates surged by more than 8% last week. Oil prices are trading lower on Monday because traders expressed demand concerns because the US CPI could force the Federal Reserve to pursue its aggressive rate hikes. Besides, worries about oil supplies eased because exports of crude oil from Azerbaijan at the terminal of Ceyhan resumed on Sunday. The crypto market is overwhelmed by the doom and gloom. Bitcoin went down and got stuck at about $21,600. Ethereum, Solana, Ripple, and Litecoin were hit by the sell-offs, having lost from 0.9 to 4.3%. Binance native token logged the heaviest loss of 6.2%. Apart from global jitters and risks, the crypto market is affected by the news on the crypto legislation. The watchdog of New York is investigating stablecoin issuer Paxos. The company received an order to stop the issuance of the token. PayPal Holdings pausing work on its stablecoin as regulators increase scrutiny of cryptocurrencies, and the key partner on the project faces a probe by the New York State Department of Financial Services. The information background is weak for the risky assets, which were badly bruised in 2022. The intraday outlook for Bitcoin is also grim. If the token fails to settle at $21,500, it may fall to $20,900. And the more optimistic scenario suggests trading in the corridor between $21,500 and $21,900. Follow developments in financial markets on InstaForex TV channel. Our team cares about your profits. See you online tomorrow.